Let's see here. Okay, so do you have an idea of how much you would like to be able to leave behind?
Yes, I would like anywhere from 300 to 400,000.
Okay, and what are you comfortable with paying each month ideally for your policy right now?
Um, as little as possible right now. Anywhere from I imagine it probably would be 100 or more a month.
Okay, that's no problem. And what's your date of birth?
July 28th, 1964.
That's 6'4" or 5'4".
64, 64.
Okay, you're still young, so it went in. We can definitely get you within your price range.
Okay.
Because that's the one thing about life insurance. We can build your policy that obviously tailors to your needs and wants and your budget as well.
Okay.
Do you have any health conditions?
I have high blood pressure.
And what are the medications that you take for that?
Um, let me see. I'm sorry. I'm just gonna check my chart because I recently changed it. Okay, so I take losartan,
Okay.
12.5 milligrams, commonly known as Hyzar, Hyzaar.
And how often do you have to take it?
Once a day.
And do you recall when you were diagnosed with high blood pressure?
I'm sorry, I'm in my chart.
You're fine.
Look it up. So I was diagnosed August of 2016. And I also was diagnosed with sleep apnea in January of 2021. I don't know if that's
Do they have you on a machine or anything?
yes.
What's the term for it exactly? I know it's like a breathing machine or something like that, right? Like
CPAP. Yes, a CPAP.
yeah. Okay. Okay. Let me. So we work with well over a dozen carriers. I believe will be a good fit for at least two of them. Let me just
Okay.
check their underwriting guideline as far in regards to the sleep apnea. It shouldn't be a problem, but I just want to double check because obviously we want to make sure we can get you approved through that carrier with no issues.
Yes.
So the process goes basically like this. We just gather some information, making sure that obviously you are approvable through the carrier. We then submit the application to their underwriting department. They'll check your pharmacy, your medical information records. If you have a driver's license, they'll check your license just to make sure everything is okay. Because there are carriers, unfortunately, that may decline somebody because maybe they have a suspended license or something like that.
Mm-hmm.
And then if the underwriter just want to, just want to do some extra checking, they may request what is called a medical examination.
Okay.
This is just basically, sometimes it's just only urine and blood draw or blood work rather, and height and weight measurements and checking your blood pressure and all that.
Okay.
And what will happen is if they do request that, we'll schedule a nurse to come out to you, or if there's a location that's nearby you that you'll be able to go to, then you can do that. The nurse can come to your home or they can come to your job, whatever you prefer, and perform the activities if one is required. Sometimes they do instead or both. They may do a phone interview, just basically asking you some of the same questions that I may ask you, just to ensure that the answers are still the same.
Okay.
And that's pretty much it. No payment is due today. Like I said, we still have to get you approved. And if you are approved, of course, I will inform you. And then at that point in time, that's when your initial premium for your policy will be in process to be drafted. The process,
Okay.
everything can take anywhere from 1 to 4 weeks. It's just depending on, if everything they request from your doctor gets back in time, and as well as if they do require a medical examination, all the results come back, etc. And that's pretty much it. Did you have any questions for me?
No. No.
Excellent, excellent. So let's do this. I'm gonna go ahead and run some quotes, and you basically can tell me yay or nay if that particular quote works for you.
Okay.
64. Right. And you are based out of Michigan, is that correct?
That's correct.
And Darlene, what is your height and estimate of your weight?
5'2" and about 160 pounds.
Okay. Okay, so you're good on that. Let's see. All right, we're gonna do a quote for the 300,000.
Okay.
And okay, so what I am considering you for is through one of our carriers, Mutual of Omaha. I don't know if you're familiar with that particular carrier.
Yes.
Oh, you are? Okay, good, good. One of their products is their Life Protection Advantage. This is a whole life product. Are you aware of the difference of a whole life and a term life product?
No. Could you tell me the difference?
Sure. So with a whole life product, obviously this covers you for your whole life. Just to give you the basics, covers you for your whole life. It does come with what is called a cash value account. Or sometimes you might hear the term accumulation value account. And basically every month that you pay on your policy, a portion of this goes into this account, and it also grows following the stock market index, more popularly the S&P 500 index, right? Without
Okay.
actually taking any risk into the stock market. So if it goes down or into the negatives, you don't lose anything.
Okay.
And of course, this is on a monthly basis. It's a little bit more costly compared to a term life product because a term life product does not include that type of feature. The feature,
Okay.
is a living benefit feature. This is money that you can use as it grows. You can use while you're still alive for any purpose that you want to use it for. Okay.
Okay.
With the term life, this covers you for X amount of years. Usually 10 years is the minimum, and the maximum is usually 30 years, just depending on your age. So that's just, most people would choose that option if they're on a certain budget, or they might have some type of terminal, chronic, or some type of illness that they don't expect to, live a long time.
Yes.
And even though it only covers you for X amount of years, you have the option with most term life to convert it to a whole life policy later on if you choose to, at least before it expires. If you find that you're able to afford a little more or something like that, or you can just let it expire and it turns into a annual renewable term policy. So every year you just pay on the same policy, but the cost of it might go up just a little bit more each year because you're getting older.
Okay.
And that's usually, one of the main differences between the two. And as you can see, most people tend to go towards the whole life because of the living benefit feature that it comes with as well. And then they don't have to worry about it in 10, 20, 30 years, or something like that.
Right, right. Yeah, the whole life sounds better.
Yeah. Like I said, the one I am considering you for, they have two different ones, and we'll just compare the two. One of them is their Life Protection Advantage product. This is an IUL, which is the one I kind of explained, the Index Universal Life. It has a long-term affordable death benefit protection. So a lot of these policies have what is called a no lapse guard. So as long as you're paying on your policy for X amount of years, um, if for some weird reason you can't pay on your policy the following month or something like that, there's something there to cover it, and it will and basically prevent your policy from lapsing. So
Okay.
this way your family doesn't have to worry about like, oh my goodness, her policy is canceled, we can't do anything. Um, it also has what is called an accelerated death benefit rider for terminal and chronic illness. So if you develop a terminal or chronic illness, um, this if and you want to exercise that particular feature, this will allow you to receive up to a certain percentage of your policy amount while you're still here. So some people, if they do develop a terminal chronic illness, and let's say they have to go into the hospital for a while or into hospice, they can access the policy amount before, transition,
Okay.
if they were to transition. You can also add what is called an accidental benefit rider. So if you pass of an accident, um, you not only will your beneficiaries receive your policy amount, but they can receive an extra amount we set for it. It could be equivalent to the policy amount. So instead of a $300,000 policy, they might receive $600,000. If you have young children under the age of 17, we can add a children term as well. And things of that sort. So I just want to kind of mention those things. Just I know you're not going to probably remember everything, but at least you kind of know what's on there as well.
Okay.
And let's see here. So the first one I'm going to quote you for is the Life Protection Advantage. And we're going to do you have the choice of paying on your policy monthly, quarterly, or annually. Which is more favorable for you?
Monthly.
Okay. Okay, so with a high benefit amount of 300,000, your monthly premium is going to be well over the $100 a month. It's going to be about $370 a month for a 300,000, and that's because of obviously your age right now. That's why it's so high.
Okay.
What do you think? Remember, we can build this to your liking. So
That's very high, but I like all of the options with it, so I'm not ruling it out. But I would like something else if possible.
no problem. And you'll still get all the features, regardless of the amount for the policy. I want to make sure that you're comfortable. So let's go 50,000 less and see.
Okay.
Okay. And we'll just keep going until you're happy.
Okay.
308 for 250.
Okay.
Want to go lower or are you good? I think to get you, if you're looking to only be within $100, how does 150 a month sounds for you?
Sounds good.
Okay, so let's do that and see what it's how much the face amount is.
Okay.
Maybe that'll be better. Let's switch it. Do you have a 401k or an annuity through your employment?
Yes.
Okay. Is it a 401k or an annuity?
A 401k.
I thought you said the post office, right?
Yes.
Hmm. I thought they also offered annuity for you all. Do you know what an annuity is?
No.
Okay. So just to briefly explain while it's calculating, the annuity is an additional retirement source of retirement income. Um, what a lot of folks do, at least what I do as well, um, is you can roll over a certain amount if you want from your 401k. So you don't have to get rid of your 401k, but you can roll over a certain amount to start your annuity, your retirement annuity contract. An annuity provides you guaranteed stream of income and you never outlive it. Um, and basically, it's just an additional source of income. I truly believe, I'm not trying to sell you on anything, so let me just put that out, disclaimer out there. But I feel it's my duty to at least let everyone know that they can have an additional source of income for retirement. Um,
Mm-hmm.
and people use annuities, even if you come into lump sums of money, especially if like you're a lottery winner or something like that. So
Mm-hmm.
you can have this pay you an additional source of income for the rest of your life. You never outlive it. It grows over time. Each month that you can have it to where a certain amount goes into it each year, or you can pay on it monthly, just like a life insurance policy. Um, and they have different forms of it as well. So if that's something that you want to, also just talk about a little more, we can also, set up a separate appointment or a follow-up appointment at your availability to discuss some additional retirement options as well as the 401k.
Yeah,
Um,
I would love to, because my 401k is at about 500,000.
mhm.
But once I retire, I'm trying to figure all of that out. Like, for instance, would it be best to pay off my house then, or would it be
Hello, I think you went mute. If you're talking, I can hear you. Okay, there you are. I don't know what happened. Okay.
Yeah, yeah, so I was just saying I would like to talk about those things because I was wondering, did I want to pay off my home once I retire, or what is the best options for that? So
Mhm.
I would definitely love to have a retirement conversation at a later time as well.
Okay, so yeah, I mean, just personally, I would want to because I mean that's a good amount of savings. And I'm guessing your employer matches you.
Yes.
Yeah, so that's even better. Um, I mean, I would want to pay off my home. I wouldn't want to. The less I have to pay out in retirement, that's more money in your pocket, and that's
Mm-hmm.
also a good reason to have an additional source of retirement income. Because of that, like you don't just when it comes to finances or investments or anything like that, you want to be very diverse. So you got some stocks, you might have bonds, you might have some real estate, you have, all those sorts of things. And life insurance is one of those things as well that can be used as like a, what did they call it? A stream of income as well.
Mm-hmm.
So, and also the annuity. So definitely at the end, we'll go ahead and just set up an appointment for that. And so that we can have more time to discuss further about an annuity for you.
Okay.
Okay, so at about $150 per month, it's quoting about for your policy amount $113,399.
Okay.
If at
Okay.
time you want more money, let's say a month from now, 6 months from now, 5 years from now, whatever, give me a call. We can always increase it or add another policy. Um,
Okay. I think I'd rather do the 250 for
okay,
$3 a month.
okay. Let's see here. Hmm. Yeah, we can always adjust later on, however you want to do it.
Okay.
Okay, so for the 250,000, it's 308 and 78 cents a month.
Okay.
So what I'm going to do is I'm going to send you right now. You can do this on your phone, tablet, or computer, and just e-sign.
No.
I have your email. I have your email listed as, oh, hold on, let me pause this real quick.